Hello, and welcome to another episode of the Market Snapshot series. My name is Rufas Kamau, Markets Analyst at FX Pesa. So welcome to another series, the Market Snapshot series. As we all know, last year we had quite some good results after going through, apologies for that, after going through the current events, doing technical analysis, and we are looking to continue with that. So if you have any feedback of your experience over last year, really appreciate this so that we can improve on the service and hopefully we get to continue delivering quality content. So hello, Caspar. Thank you. Welcome and Happy New Year. Hello, Maureen. Hello, Richie and Sharon. I appreciate seeing you on this specific webinar. So today, we'll be looking at an overview, the current key economic news. Once we are done with that, we also go through the technical analysis. The technical analysis remains as usual. So we go through the major currency pairs. We also get to go through the major stock market indices. We look at the dollar index, we look at the commodities, very good as well. And once we are done, hopefully everyone will understand what's the current thing in the market, and you will be able to make informed decisions. So as you all know, these sessions are not financial advice, they are not investment advice. So you should always do your own research and analysis and make your own decisions. Remember to practice proper risk management. So as we continue with the year, I'm hoping that everyone who attends these sessions will have a better understanding of what's currently happening in the markets, what's the current market structure, and most importantly, do not blow your accounts. So let's get things going. Hello, Takeout. I can see the house. Hello, Eric. I can see Alpuna Stoko, Eric Wilson, Benson, Decipher, and Arnold. Thank you, guys. This is my first live session and I'm eager to learn. Thank you. So let's get things started now that we are done with that part. So start with the economic data. So to understand what are the events that we expect in the market today. Once we go through that, then we also try to understand some technical analysis. So mostly, as we all know, there is various economic calendars. So I normally use the Forex Factory calendar. For one good reason. It has been a very stable website, no ads, no nothing, and I've been using for the past 10 plus years. So it serves as a really good economic calendar. So if you are getting more advanced into trading, you might want to consider another economic calendar. And this one is from another website called Trading Economics. So from Trading Economics, you get to see more detailed view of the news. So if you are moving to advanced of video fundamental analysis, I would advise that you now shift to Trading Economics. So from an overview, we don't have much happening. I believe the most important news of the week will be the US inflation data, which comes up on on Thursday. So this is when we have the US CPI at 4:30 p.m. We also be getting core CPI, of course, year-over-year CPI together with unemployment claims, or released at the same time. So that remains the most important event, the economic calendar this week. So Monday, we had quite a number of things. Remember, it's still a bank holiday in Japan as they celebrate their new year. So in this case, we don't have much activity coming in Japan. We had factory orders coming in from Germany, which were up 0.3%. And this was a big improvement from the big drop in the previous month of November, which was negative 3.8%. As we all know, in these economic calendars we are reading, there's three main columns. There's the actual, forecast, and previous data. So the actual data mostly will be representing the outcome that is being announced. And since we're in January, it basically reflects what happened in the month of December. So Germany factory orders were up 3%, basically showing that the manufacturing activity or factory activity in Germany has been improving. So in comparison, we were expecting 1.1%, so it was slightly lower than expected. But then the previous number was a negative, basically means that there is a huge improvement. So on the other hand, the trade balance in Germany also improved to 2.4 billion euros, and this was better than expected, and was better than the previous reading. So we also had inflation data coming in from Switzerland. So for the month of December, there was no change in the basket of commodities that they named the Consumer Price Index, CPI. So in the previous reading, it was down negative 0.2%, meaning the price of these baskets was going down in the month of November. So in December, there was not much change, and this was better than the expectation of negative 0.1%. So as you can see, we also had retail sales data coming in from Switzerland, which was up 0.7% year over year. This is what Y/Y means. And this, in comparison with the previous month, it was 0.3% negative in the month of November. So we expected 0.0 and we got 0.7. So this was largely better than expected. So when you focus on this data point, and then you compare with what we have from the trading economics calendar, you'll notice the key difference I was trying to explain earlier. So if you look at the inflation data from Switzerland, from the economic calendar, from the trading economics economic calendar, you can see that it's a little bit more detailed. So for Switzerland, the inflation rate year over year came in at 1.7%, and this was higher than the previous reading of 1.4%. Of course, higher than the expectation and consensus of 1.5% and 1.6%. So this basically gives you an overview of what's currently happened with that data point. And in this case, you can see that the inflation rate is on the rise in Switzerland from a previous reading of 1.4% in November up to 1.7% in December. So the retail sales year over year same thing as the economic calendar. But then you can see that you also get the inflation rate month over month, which increased by 0%. Then retail sales was 0.7%. Previous reading was negative 0.3%. This was a huge improvement. So whenever you see data represented as year over year, you are basically looking at the outcome today compared to the same period last year. So in this case, seeing these 0.7%, we are basically saying that the number that was reported on December compared to the one that we saw on December 23, the difference was up 0.7%, meaning that there is a huge improvement. However, if you look at the month over month, at the beginning of December versus end of December, and then when you compare those sales, then you understand that they were up 0.7%, meaning that you at the change over that 1 month. So now that that's out of the way, we continue. So that information is already priced in. And now when you look at the current events today, we started with the Tokyo core CPI. So when you talk of core CPI, it basically means that we are looking at the consumer price index without factoring in the volatile assets or the volatile prices of gold and energy. So we are looking at more stable prices in the city of Tokyo, in the province of Tokyo. In Japan, they use provinces rather than states or other names. So in this case, it was up 2.1%. And the previous reading was 0.3%. It's currently meaning that the inflation is on the drop. But despite seeing inflation rising in Switzerland, Japan is moving in the opposite direction. So household spending was also down on negative 2.9%, which was lower than the previous reading, which was negative 2.5%. So we also had retail sales from the UK, which were down 1.9%. Was retail sales from Australia, which were up 2%, previous negative 0.5%. We also had building approvals in Australia, but this was 3:30 a.m. today. So it was up 1.6%, but then when you compare the previous reading, which was 7.2%, then you see it's a huge drop. The unemployment rate in Switzerland remained relatively the same at 2.2% as expected. But then the previous reading was 2.1%, meaning that the unemployment is on the rise in Switzerland. For German industrial production, negative 0.7%, compared to the previous reading of negative 0.3%. So in this case, it basically shows that it's on the drop. And this is in contrast with what we saw with factory orders yesterday. So most of these news from this graph here, if they are yellow, normally you expect it to no impact in the markets. So it's basically described as low impact. If it's orange, it's described as medium impact. And if it's red, then you expect high impact news. So this is based on history of the data point. So sometimes if there's a huge discrepancy between the reported outcome and the forecast, then you expect a big movement in the markets. So that explains why, as I mentioned, that the most important news for the week, the consumer price index for the US, which released on Thursday, and as you can see, the graph is red in color. So as for today, the most important news as we head on with the economic calendar is expected to be the trade balance for both the US and Canada, and this will be released at 4:30 p.m. So 4:30, get the building permits from Canada, get the trade balance from Canada, and trade balance from the US. So as we all know, trade balance is the difference between exports and imports. So when a country is exporting more and importing less, then in that case, we'll have a positive trade balance. And if it's importing more than importing, then it becomes negative. So for some economies, if you see a negative trade balance, it doesn't mean that the economy is bad. Some economies have long been net consumers, others are net exporters. So for instance, if you look at an economy like Japan, China, mostly they will be net exporters. But for most European and US economies, they tend to be net consumers. So in most cases, their trade balance will tend to be negative. So for the US, the previous reading, it was negative $64.3 billion. And now we're expecting this to change to negative $64.9 billion, basically indicating that things could be getting slightly worse. So when you're trying to understand how this affects the market, you have to think about it logically. So when you think of trade balance, if an economy is exporting more and importing less, and the trade balance is improving and moving towards the positive side, then basically means that the economy is more robust, it's having more activity, and as a result, it tends to strengthen the equities as well as the demand for that currency of that economy. So in this case, if we see an improvement towards the positive direction, then in that case, we should be expecting to see a much stronger dollar. Of course, we should also be expecting to see much stronger US equities. So I talk about equities, it's basically stocks of publicly traded companies. Instead of mentioning one in an economy that has thousands of companies, we focus on what we call the benchmark stock market indices. So for the US, we majorly focus on the top three. So we focus on the S&P 500, focus on the NASDAQ, as well as the Dow Jones, and some investors might consider trading the Russell 2000 index. So for Canada, previously it was 3.0 billion Canadian dollars, and now we're expecting this number to drop to 2.0 billion Canadian dollars. So if the number is lower than expected, let's say less than 2 billion, then in that case it would be worse for the Canadian dollar. But then if it's higher than the 2 billion indicated here as the expectation, then we should be expecting to see a positive outcome. So as we head towards the end of the day, so we'll be expecting the economic optimism survey from the US. This is tentative, and by tentative, it means that there is no specified time. So we don't know the exact time when the news will be announced. So in that case, that's why it's labeled as such. In this case, it means that it could happen somewhere between 4:30 p.m. and 8 p.m. So as we approach the end of the day, we'll be having a speech from FOMC member Barr, and this will be at 8 p.m. So at 8 p.m., once we get this speech, there's a high likelihood that the FOMC member might mention something about US monetary policy, but could impact the markets. So, for instance, yesterday, towards the end of the day, I've heard a couple of Fed members speaking. One of them was FOMC Bostic. And one of the key highlights was that they downplayed the potential for the US going for rate cuts, and that had an impact in the markets. So it happened at 8:30 p.m. And luckily, we have a summary of the same on Yahoo Finance article. So I'll be sharing this article with you. So we'll be just pasting the link on the comment that article. So going back to the article, just to get the highlight. So Federal Reserve officials said on Monday that they believe that holding interest rates at current levels for some time could bring back inflation back down to the central bank's target, pouring cold water on Wall Street expectations that cuts could begin in the first quarter. So last year, as we approached the end of the year, especially in December, there was a lot of speculation that the Fed would go for rate cuts as early as March this year. So that led to a lot of speculations, and some of those speculations led to all-time highs in US indices. Remember, when there's rate cuts, the cost of capital becomes really cheap, and as a result, out of money find itself in risky assets such as stocks, and as a result, we tend to see stock valuations moving up. So in this case, there was this expectation that the Fed could cut rates as early as March, and that led to speculations that led to people buying more US equity indices. And at the same time, they were dumping the dollar because the dollar tends to be more valuable when interest rates are higher. So if interest rates are expected to go down, markets are forward-looking, so investors short the dollar in advance. So that's what we were expecting towards the end of the year, but now things are shifting. And if two Fed officials are basically considering holding rates higher, then it means a couple of things. One, we're seeing that bonds might start to recover, is bond yields. And if bond yields are recovering, then it means more demand for the dollar, and the dollar index continues to strengthen. However, as for the US equity indices, they might not react much to this. They are more concerned on the fiscal side, spending, how strong is the US consumer. If the US consumer is strong, despite the high interest rates, then companies are expected to make more sales. And at the same time, we continue seeing higher valuation in equities. So that's the understanding from this. So one of these officials, Fed Governor Michelle Baumann, kept the prospect of interest rate hikes on the table. Kept the prospect of interest rate hikes on the table should progress on inflation stall. So from what we are seeing from major economies around the world, it seems like inflation is on the rise yet again. So despite spending the last, I would say, 18 months, remember the rate hike started in March 2021. So inflation has been on the rise and then started dropping and almost got to the target of 2%. But then there are key things that have been changing. So one of them, oil was on the rise, was the end of last year, but then it kept dropping in December. And as we entered January, it continued dropping, so oil is behaving as expected. Cheaper oil prices, we tend to see cheaper products that are related to oil. And in that case, inflation tends to move in the right direction, that is downwards. However, the current conflict happening in the Middle East, especially in the Red Sea, where the Houthis have been making the business of shipping more difficult, meaning that ships have to take routes to get to Europe, and the US has led higher shipping prices. And with higher shipping prices, then you tend to see consumer products going up. So in that case, it leads to a risk that inflation could be on the rise again. And this is one of the factors that investors are considering as they focus on currencies, stocks, as well as commodities. So that's one of the key factors. The Fed members know these, and now that they are afraid that the inflation could be on the rise again, they are not in a hurry to cut rates. So, but moderate a view expressed in November that the Fed would have raised rates further, get inflation down to the market, to the central banks, percent target. So they don't want to hike interest rates higher, but at the same time, they don't want to be in a hurry to cut interest rates. My view has evolved to consider the possibility that the rate of inflation could decline further. The policy rate held at the current level for some time, Bowman said in a speech in Columbia before the South Carolina Bankers Association. So while she acknowledged it would eventually become appropriate to begin the process of lowering rates to prevent the policy rate from becoming overly restrictive, she said we are not yet at that point. So more on this will be covered as we continue with the week. Remember, we can just get into the snapshot series. So every day we have one of these episodes to cover some new stuff. Hopefully, everyone that attends this session gets to learn something or understand a perspective that they did not have before. So that being mentioned, knowing that we don't have much for the rest of the day, now we can look at the technical analysis. So we'll be starting with one of the favorites, and this is the dollar index, which is basically a measure of the strength of the dollar against other currencies. So as we started the year, on the first 5 days, the dollar index was pretty strong. So this is where we started here on the new year. So we saw the dollar index moving up, and then continuing to move higher. So remember, this was I believe the 2nd of January. We did not trade on the 1st because it was a public holiday. Americans celebrating the new year. So on the 2nd day of trading, moved higher. That day traded sideways, and then on the 4th day, that was Friday last week. This is when we had the most volatility as a result of the U.S. non-farm payrolls report. So during the U.S. non-farm payrolls report, we saw a higher number of jobs being created in the U.S. economy. So as a result, we continued to see the dollar spiking up, but then immediately changed direction after looking at the revisions in the non-farm payrolls. So there was a big drop towards the afternoon, then it made some recovery. Then on Monday, which was yesterday, the dollar index continued losing. Then today you can see the dollar index making a recovery. So pointing to the news that happened last night, Fed members is very shelving the plans for rate cuts. This kind of means that if interest rates remain higher for longer, then the dollar index will strengthen. So there's a possibility we could continue seeing a much stronger dollar for the rest of the day. So with a stronger dollar, now looking at other currencies, you can see it's strengthening against yen again. So USD JPY is on the rise again, and we could be seeing the USD JPY retesting major resistance level. So from the chart here, I can move my earlier lines. I think these lines are old. They were last seen last year. So in this case, this is the highest price we had here, acting as a major resistance level. And now the price is the reverse again. So there's a good chance we could be seeing a recovery higher. So from the 15-minute chart, you can see that since yesterday and today, there seems to be some form of trend line here. So if the market conclusively breaks this area here, then there's a good chance that we see the market retesting this area. So a potential target would be 154.936 for the JPY, USD JPY in this case, depending on the price action that we see here. So it's a key currency watch, especially considering that the Japanese yen has been pretty weak against other currencies. And now you can see from the beginning of the year, the dollar made quite a strong rally against the yen, reversed on Friday, and then on Monday. Today started with a big drop, but then the recovery implies that we could be headed higher to a previous high of 144.936. So as for Euro USD, I will do the same thing, clean my chart, remove any of the existing buyers. And now you can see that for this number of days, I would say 3, 4, and now the 5th day, what we are seeing this chart very sideways momentum. So it's not a clean direction where we can say that this market is headed here. So looking at this, and then also looking at this, then it suggests that there is a slight bullish momentum happening on Euro USD, meaning that the euro is gaining against the dollar. However, since it's a sideways momentum, remember, you want to optimize chances by trading around the edges. So you want to be trading or looking for trading positions. The market is somewhere around here or somewhere around the upper side. So in this case, the current price level is very interesting because it doesn't optimize your chances. Remember, the only reason we trade support and resistance levels is because they provide you with the best end and exit points. So if the market gets here, then you go for a short selling trade, then you can start to make some good pips. But then if you're wrong and the market breaks the trend line, then you can exit with a very small loss. So that's the reasoning behind it. So it doesn't seem at all that attractive. For pound USD, we do the same thing. We remove all pre-existing buyers. Try to zoom out and understand the whole picture. So let's start with the 4-hour chart. And now for the 4-hour chart, I think it's pretty clear for everyone that this has been pretty strong bullish momentum. The market has been following this path for quite a while now. And this particular trend line has been acting as a very strong support. So on the other side, we have seen a very strong bullish momentum, and this can be marked using this trend line here. But then if you look closely, you will notice that there has been a pretty strong resistance. The market has not been able to break one of these levels. So we're drawing yet another trend line here, trying to connect the previous highs. And now you can see that the trend is weakening. The market is forming higher highs, but these higher highs are not as aggressive as the previous ones, meaning that the pound is pretty strong against the dollar, but not as strong as previously seen. So as a result of this, now if you narrow down the analysis, you can notice that there is different levels. These would be the major resistance to think about. This is the most recent high. Then we also had a high here. And of course, we had the highs that we experienced yesterday as well as Friday last week. So clearly, there is evidence of the market really struggling to break this area. So notice the struggle and the number of times the market has gotten into this area. Being unable to break above these basically means that the dollar is strengthening against the pound, and now we are headed back downwards. So clearly, we are within the range of yesterday. So a nice target for a short-term trade would be within the range of yesterday. That is the range of yesterday's high and yesterday's low. So yesterday's low was 1.26716. Price opened here, went down, and then on the way up, has been unable to break out the resistance. And now, as the dollar strengthens, then the likelihood becomes real that the market will drop further back downwards, get to 1.26716. So USD card, on this case, we continue with the same theme. We remove the accumulated bias, and I'm doing this for a reason, just to show you that whenever you have lines accumulated over time, you have to remove them and the analysis afresh so that you can get a clearer perspective on what you are doing. So for USD card, we are seeing a very strong resistance line there. And then for the support line, it seems to be following this path here. So still quite bullish. And now we are seeing the market bouncing off this area here. So a potential retest of the previous high could be happening today. And now the potential move seems that the dollar could continue strengthening and eventually get to yesterday's high, somewhere around 1.33977, or rather we just feed it up to 1.34. So as for gold, we are also seeing a strong market movement. So with the dollar being pretty strong, the price of gold has been losing. And now what we are seeing here is a market that is beginning to form what looks like a bearish trend line. So in the bearish trend line, it seems like the market is going for this. We already have 0.1, 0.2, and 0.3 to draw our trend line. So remember, the trend lines are not to scale. It's just to understand this momentum and the sequence of highs and lows. And now that the market attempted to pick up back yesterday in the evening, the current hour, it seems to be failing to move higher. And now we'll be seeing the market make a retest of the previous low. And this is the low that we just saw yesterday. And of course, has been tested before. So this is quite significant for any gold trader. Wanna understand what's happening here and why it has repeated itself yet again here. So in this case, knowing that the dollar is pretty strong, if gold was to come back, then the idea is that gold would retest this particular bottom of $2,010. $16 per ounce. Then for Australian dollar, trading against the US dollar, you can see that it's currently trading in hot range, but we apply the same idea that I just mentioned. So we remove all the accumulated buyers, try to understand what's happening here. And from what I can gather here, there's a particular trend line going this way, showing the previous highs here. And then this was adjusted. The market was still forming lower highs, but then it was adjusted to this area here. So clearly, the market has been finding a lot of resistance in this area. And being unable to break that area, then it means that there's a likelihood that we continue seeing the Australian dollar losing to a strong dollar and a potential further drop was the previous low. And the previous low was the same level that we saw yesterday as well as Friday. If we ignore the tail here, clearly a drop to 0.66759 is likely. So as for US equity indices, we saw one of the biggest moves happening yesterday as investors were betting on the continuation of the bull run. And this led to a big impulsive move of, if we do an estimate here, so right from the open of the market towards the end, the Nasdaq was up 2.15%. So today doesn't seem at all promising, but then the idea is already entrenched. So there's a good likelihood that we could be seeing a continuation of this recovery. So if I zoom out here on the 4-hour chart, then you can see the bullish momentum has been pretty strong. So the market made a pullback and found a bottom here towards the end of last week. And now this week, it seems like the market is making a recovery and going for yet another high. So if this momentum continues, then the target is pretty simple, the previous high of 16,979. But then as right now, you can see that the market is pulling back downwards. So now, a key level to think about is this area here, just highlighting the previous lows. So the market found support here, and now that it is pulling back, then the idea is that there is that potential that the market drop, get to this area, and then once it gets to this area, then potentially bounce and get all the way up. So remember, I'm not always right. Sometimes I'm wrong. The market just drop all the way back down. So the idea is to focus on this price action level and then look at what price does once it gets to that area. So it's just about observing and seeing what the price will do once it gets to this area. So if there's a strong bounce and you see evidence of buyers entering this market, then it becomes a much stronger idea. Go for a buy trade and target this area here. So I think it's a similar thing for other US equity indices. So after the strong rally in the US 30, or what we normally describe as the Dow Jones, sometimes some people will call it the GIA or DJIA, Dow Jones Industrial Average. So the trend here has been bearish if you ignore these tails here. And from this other end, you can see that the trend line has been pretty simple. So after breaking above this trend line, and now the market is going back downwards, it's common to understand that this area becomes of very high interest in that the market will be looking back, retest this area before continuing in the direction of the break. So the break was pretty clear and it's upwards. So this is when the market broke outside this particular trend line. And now that the market is pulling back downwards, the idea is to be patient and potentially a trading idea once the market gets to this level and then trade higher. So it's just a projection. So you just have to wait and see what the market does. So as for the S&P 500, we are seeing a pullback and the market potentially bouncing from this area again. So from the 4-hour chart, this is how it looks like. So as always, as I mentioned, we remove the accumulated buyers. And now you can see it was a pretty healthy bullish momentum. If you count the number of weeks, I think it's 9. 1, 2, 3, 4, 5, 6, 7, 8, 9. So we had 9 straight weeks of the S&P 500 making a very strong bullish momentum. Then last week, we had a pullback, and it was the first negative week in 9 weeks. So after getting to this support area, it attempted to break, but then found strong support and reversed. Now, after making the strong rally yesterday, there is that expectation that the market could continue going up and eventually get to the previous high. So the previous high is somewhere around 4,795. Now that we are seeing this pullback, the idea is to look for the same. So market drops, find support, and then later starts moving further upwards. So at the current price level, would be very skeptical going for a trade. We'll just be patient and see what price does around this area. And if there is a strong entry by buyers, then we target this area yet again. But though you have to be prepared for a complete reversal. So remember, you're following the price, not my advice. So you look at the price and where it's headed, and then use that to your advantage. So for oil, it has been pretty simple. It's a range. Nothing much is happening well. So yes, there has been pretty strong drops, but then even with these strong drops, the market seems to be finding some very strong resistance as well as support. So this area seems to have been a significant resistance. The market is really struggling to break that. So on the lower side, we're also seeing this. So since the beginning of the year, you can see that the market has been trading within these two price levels. So one being around this area here, 79.133. And then on the lower side, we are seeing this price level here, 75.171. So judging by the swings, we just bounced off the bottom, and now the market could be headed higher. And in this case, the market could be going for this particular resistance level. So a key number of developments that have happened this year is one, Saudi Arabia has begun cutting oil prices. And that's having an impact. And maybe that's the reason we had the big sell-off yesterday. So another key development is that the disruptions happening in the Red Sea are causing speculation that oil could be on the rise yet again. Also knowing that Angola is the most recent country to exit the OPEC plus countries. Of course, noting that some countries in the OPEC are producing more oil and flooding the markets, leading to lower prices. So in this case, I'm still bearish. Sorry, I'm very bearish on oil prices. But right now, the cycle and what we are seeing in the prices seems that like the price is now moving towards the upside. So, well, this is a noble idea, judging from the fundamentals. Make more sense to be patient, then look for another short entry. So from the current price action, it basically shows that we are currently on a bearish trend. So market has been clearly moving downwards, but then any attempts to move upwards have been met with a strong entry by sellers, eventually pushing prices further back downwards. So in this case, even though there seems to be a strong bullish momentum, I would be pretty afraid, then wait for the next selling opportunity. There seems to be a correlation between US equities as well as European equities. So for the French 40 index, it seems to be having a very strong bearish momentum in the current hour, the big red candlestick that you can see here. So in this case, it seems like European equities are taking correction. So from what we are seeing on the trend here, if you do a trend line for the last couple of days, it seems to be following this path. The market just bounced off the upper trend line and then made a big surprise fall. So we could be seeing some further downside momentum hitting these two bottoms. We have this bottom here and this other bottom here. So a nice target of 7,068 for the French 40 index of the CAC 40. So for the Euro 50, another big drop. So we still expect to see some further downside momentum around this area here. My charts are still noisy, but you can already see that we had a topping pattern here. So topping pattern is normally a reversal pattern indicating weakness in the existing trend, which may indicate the potential reversal. So the topping pattern in this case was basically what we describe as a head and shoulder pattern. This being the first shoulder, the head, the second shoulder, then the market started pressing further downwards. So after breaking this particular neckline, really struggled to break downwards, but then eventually we had this reversal. And now there's a good likelihood of seeing some further downside momentum. the Eurostoxx 50 index. So if you zoom out here, you'll notice that there has been a trend line. The market has been holding here. I don't know where is the right place to set this trend line. Maybe this is the best place. But then on the upper side, it doesn't seem to be having the best of trend lines. We can see that there is a clean trend line associated with all these highs. So if I told you this was the pattern, I'd be lying, because there seems to be a pattern within the pattern that seems to be crisscrossing in between. So the crisscrossing pattern is passing through here. And in this case, the exemption is that is this one instance where price broke up and then back within this particular channel. So with a big sell-off currently happening, there's a good likelihood that we get to see the market tracking yesterday's low. So there's still more room for downside to around 4,138. And I think the most action we are currently seeing in the market is coming from these European indices. So the Euro 50 cash index making a big sell, the French 40 making a big sell. So an idea of shorting might make sense. So Bitcoin, I think, has been the most dominant asset in terms of people talking about it on news, social media, and everything. And this is basically coming from a point of view that the SEC might make a decision on a spot Bitcoin ETF later this week, and the decision could be either approve or reject the applications. So there's big corporations, 13 of them, that have already made applications, and this has led to the big momentum that we have seen this week. So yesterday, within a very short period of time, we saw the price of Bitcoin vary all the way to about $47,000 per Bitcoin. But then once we go to that high, we haven't had much action. So if you're looking to speculate on this, I think it might make more sense to observe this area here as your resistance. Of course, for support, you might want to consider this, then wait for the breakout of either of these two zones here. So if it breaks to the upper side, it makes more sense to long positions. Of course, if it breaks the lower trend line, then it makes more sense to short selling positions. So for New Zealand USD, we don't have much happening. This seems more like a range for me. So a range is a sideways momentum in a market. So in that case, we don't have a clear direction. Basically implies that the market is consolidating and you don't have a clear signal. So in that case, it makes more sense to be more patient and wait for an eventual break or trade along the edges. So trading along the edges means that if price gets to this area, you start looking for short positions. Gets to this area, you start looking for bullish positions. But then in this case, it seems like the market is not yet at the best opportunity to look for an opportunity. So last three, we have the dollar trading against the Swiss franc. As usual, everything that we had applied last year, zoom out and notice that this market is clearly trading in a range. It's a slight channel because it's having some form of direction, slightly bearish. We can say that when we draw these two trend lines, we can estimate the overall direction of price for the last 5 days has been following this path. So now the price is moving higher. In this case, the dollar strengthening against the Swiss franc. I would be on the lookout for a potential breakout. So if the market breaks out of this particular trend line, then it could be the case for a continuation of the bullish momentum, and the resulting price action would likely head to this area. So if the price gets to this area and shows more strength, then the idea is to trade higher, and then we see if the market could get to 0.85752. So that's it. That's the end of the presentation. Hopefully you got to learn something today, and I'll be looking at more presentations. Remember, the market snapshots happen daily at 11 a.m. And for today, we'll be having yet another session at 4 p.m. where we cover more ground in terms of what to expect during the New York session. So that's why it's called the Market Grants series. So looking at the comment section, noticing that you guys didn't raise any questions. So it has been the custom of the market series that during the presentation, if you have any special request or question, then you basically raise that question here. So let's see. The voice is breaking. Apologies for that. Hopefully, it didn't last for long. So expectations for the CPI is that inflation could be on the rise, and if inflation is on the rise, means that the Fed could hold rates higher for longer, which is positive for the dollar. In that case, we should be looking to see a much stronger dollar on Thursday. So Happy New Year, Charles Mkua. Hello, Miriam. I can see Ice Mike. What's your take on holding trades overnight? Holding trades overnight has never been a problem. Then if you are sensitive of swaps, you should always check, especially on Wednesday. So if you're trading currencies, you know that 3-day swaps happen on Wednesday. So if you hold your trade on Wednesday past midnight, then you get to pay 3-day swaps. So I think that's the one thing you should be concerned about. But then for other currencies, it's usually a very slight amount and it may not impact your trade much. So holding the trades for longer might be an idea if you happen to be a patient trader. So hello, Franklin. I can see Philip in the house. I think I've responded to all questions that you guys have raised. Thank you for your time. Thank you for your participation, questions, comments. And I hope to see you on the next episode. And this will be happening at 4 p.m. later today. Good question here. I would like you to mentor me. I would really like to do that, but as we all know, I have to work with FX Pesa full time. So I'm still doing some other stuff, including the podcast. Remember, you have the Bullish Banter podcast happening on each and every Wednesday. So if you check the FX Pesa YouTube or all other podcast platforms, then you should be able to see the new episodes coming up, explaining what's currently happening in the markets. In that case, for the podcast, we take a more fundamental view, trying to explore deeper topics and help you understand so that you can trade from an informed perspective. So thank you guys, and see you then. I think we are off to a good start. Let's keep the momentum going. Take care of yourself. See you then.